According to supply managers in the 9 Mid-America states, how is the economy performing?
Our May survey of supply managers, manufacturing supply managers in the 9 Mid-American states here at Creighton University, the overall reading was not good. It fell below growth neutral. It fell to 48.2, which is below the growth neutral reading of 50.0, and that's down from April's 52.5. So what's happening, we're seeing in the national numbers, we're seeing in the regional numbers across the nation, they're bouncing around to below growth neutral, above growth neutral, and it's just indicating that the manufacturing economy nationwide and in the regions and in the states is moving sideways to a bit down. So was not good. This is the third time in the past 4 months that the reading has been below growth neutral, again, much like the national number. Here I'll bring up the graph showing Creighton's number. That's Creighton's survey of the 9 Mid-America states, and beautiful Creighton blue there, and you see how it's moved along and sort of basically around growth neutral over the last several months, since December certainly. And you see there in red, and the national number will come out later on this morning. That one is likewise weak. It was below growth neutral last month. I probably, if I had to bet on it, I'd say it'll come in slightly above growth neutral. And they're called the PMIs, Purchasing Management Index, for those who are not familiar with that, the reading there.
What were the hiring trends?
Hiring was, I won't call it awful, but it was not good. The May reading was 43.7. Of course, that's well below growth neutral, but that's up from April's 40.0. So I think we're in a territory where we're showing job losses each month, but they're not as significant as they could be, not like what we saw back in the pandemic. And approximately 33% reported job losses, so that year over year. Now that's certainly not what we'd like to see, but nonetheless, the regional economy, most of the state economies, manufacturing that is, are just moving along. Wage gains, and that's above the inflation rate. So at least there were some wage gains there for most of the states. Now, Missouri was the big gainer in terms of both on the wages and the employment side, and North Dakota was the big loser this month, at least in the last 12 months.
What inflation trends are you noticing?
Inflation's higher than we'd like to see. We're seeing it at the gauge for May was 70.8, and that's down from 76.0 in April. Still, I would say, indicating elevated inflationary pressures, but not significant, much like what we're seeing at the national level and what we've seen over there. If you look at the month-over-month growth in the CPI, over the last 3 months, that's 1.1%. That's about what we're seeing. The core, which excludes food and energy, that's up 1.1% over the last 3 months. Of course, you multiply that by 4 and you get something that's well above, or almost is more than double, the Fed's target. So we're still on the side that says no rate cut anytime soon. The PPI, which is equivalent to what we're gathering here at Creighton University, that was much the same, although it was a bit stronger, 1.5%. Again, multiply that, that's for 3 months, multiply that by 4, of course you get 6%, and that's triple what the Fed's target is. But again, the PPI's, Producer Price Index, or what's sometimes called the Wholesale Price Index, that jumps around a lot, so I wouldn't be too alarmed about that. But again, these rates, these inflation numbers are well above what the Fed's comfortable with. And the Fed meets again, the Open Market Committee meets again on the 11th and 12th of June. We'll wait and see, but I'll leave that to my concluding remarks about what's going to happen there. Supply managers, this was pretty good news. We asked about what you expect prices to increase by over the next year, and that was 4.9% on average. Now that sounds a bit high, but that's better than what we've been seeing. So that was a better number than I anticipated.
What is the economic outlook?
The outlook is no rate cut anytime soon. I'm expecting, as I talk today, the earliest I see a rate cut is September the 17th and 18th when the Fed meets. Of course, there are meetings between now and then. But you need to keep an eye on the Federal Reserve's balance sheet. We talk about rate cuts, or we do, economists do, but keep an eye on the balance sheet. That's a long-term debt. And the Fed said they were going to stop, at least slow down, I should say, quantitative tightening. And of course, what does that mean? It means that long-term rates are not going to move upward as much as they were absent these quantitative tightening. Then you've got CPI inflation. I expect when the May number comes out, I think it's going to be 0.4 percentage point. That's much too strong. You multiply that by 12, you get 4.8. Of course, that's well above the Fed's target. Long-term rates will move sideways to a bit higher, but as I said, the Fed's protecting that with quantitative tightening, which they're slowing down, so that's good news for borrowers. Prime rate will not rise between now and September. On September the 19th, I would say it'd be the next increase in the prime rate. It'll remain at 8.5%, and at that time it may go up as 8.75%. Keep an eye on the bond market. We've talked about that. The 10-year Treasury, it's moving up toward 4.8. That's worrisome. It gets higher than that. Watch out for the gold bugs. Gold is getting a free ride here, so it's been a big performer, and as Bitcoin has as well. Both those two are hedges against risk, and risk are, in my judgment, are rising, and investors are seeing that. Federal Reserve's balance sheet, all you have to do is go to Google and just say Federal Reserve balance sheet, take you right there. You can see what the Fed's doing and not doing. A national ISM reading for the month of May, which comes out later on this morning. I think that's going to be certainly not, it's not going to be that strong. It might even be weaker, but it's going to be much like our number, which is, I would say, gravitating above and below the growth neutral 50.0. Also keep an eye on the price of a barrel of oil. That's going to be an election big issue. Americans pay attention to the price of oil. It moves more to the price of gasoline, of course, which is when the price of oil goes up, the price of gasoline goes up. That's the big mover. Right now, it's going to move in a range. We're not going to see much of a jump unless we have international tensions, or if the President Biden gets really antsy and wants to release some of the reserve oil to bring down the oil prices. Listen carefully to the statements by the 12 members of the FOMC, the Federal Open Market Committee. They've been yelling, almost yelling, when an economist raises his or her voice, that's yelling. We're timid guys and gals, so and they've been raising their voice, saying, "Don't count on a rate cut." The president of the Minneapolis said, "Hey, we could even raise rates." That was a shot across the bow, and of course, markets took that not so well. One thing all of us need to watch out for is what Freddie Mac is proposing to do. That's the GSE, Government Supported Enterprise. What they're proposing to do is re-enter the home equity market and providing second mortgages or home equity lines for homeowners so that homeowners can bring some of that equity they have to spend in the economy. The last time they did this, back in 2008 through 2009, cost the taxpayers, U.S. taxpayers, $187 billion. That's a B. That's billions with a B. That was a bad idea then. It's even worse today. What it will mean from our surveys and what it will mean to the Federal Reserve, that will seal the deal for no rate cut this year. So that's it for the month of May. Here Ernie Goss here for Creighton University, discussing our Mid-American Survey of Supply Managers, Manufacturing Supply Managers. And thank you for joining in until we meet again the first business day of July. May your economic cup runneth over, and thank you.